Okay, everyone, I am informed by a very reliable source that we have a quorum. So I'm going to call the meeting to order at 6:31. And I'm going to begin by asking our clerk, Carlin, to call the roll to confirm that we have a quorum.
Okay, this is the roll call. Suresh Bhatia. Peggy Briggs. Brian Conway.
Present.
Kathy Kukalo.
Here.
Hi, Kathy. Eric Dahlberg.
Here.
John Garofalo.
Here.
Pat Geyer.
Here.
Gerard Jansen.
Here.
Don Kupka.
Here.
Lindsay Liss.
Here.
Carlin Reed here. Paul Rodriguez.
Here.
Kazi Sedruzaman. Shri Tupel.
Yep.
And Lois Wassoff.
Here.
We have a quorum.
Okay, welcome, everybody. We're going to begin, as we always do, with an opportunity for public comment. And as is our practice, public comment is limited to up to 10 minutes, with no more than 2 minutes allocated to any one speaker. And as is always the case, we limit public comment to items that are not on the agenda. So, is there any member of the public who has a comment to offer at this time? Any raised hands online?
Let's take a look.
Ryan, anybody out there?
No one with raised hand.
Okay, so we can move on to the next item, which will be quick, because it is to review the correspondence, if any, and there was none. So we can move on to item 4 on our agenda. At this rate, we'll be home by 7:15, which is to approve the minutes of December 8th and December 11th. Both sets of minutes were in your packets. Let me ask, does anyone have comments on either set of the minutes, so we can decide, Don, on which?
December 11th.
December 11th? Okay, so let's take them separately and start with December 8th. Does anyone have any comments, corrections, amendments to the minutes of December 8th?
I move that we approve the minutes of December 8, 2025 as presented.
Second.
All right, Paul has the second. Thank you. Okay. Is there any other discussion on December 8 minutes? Do a roll call on the December 8 minutes, whether or not to approve the minutes as presented for December 8. Peggy Briggs, are you on? No. Brian Conway?
Approved.
Kathy Kukalo? Do you approve the minutes, Kathy, for December 8? You're on mute.
Yes.
Thank you. Eric Dahlberg?
Yes.
John Garofalo?
Yes.
Pat Geyer?
Yes.
Gerard Jansen?
Yes.
Don Kupka?
Yes.
Lindsay Liss?
Yes.
Carlin Reed, yes. Paul Rodriguez?
Yes.
Shri Tupel?
Yes.
Lois Wassoff?
Yes.
Okay, passed unanimously.
So now let's take a look at the December 11 minutes, and before we even make a motion, why don't we hear, I understand there are some comments on the minutes, Don? Do you have a?
Yeah, just on a minor point, but on page 3, the second paragraph notes about halfway down, added financial pressures to residents include $30 million debt exclusion for road repairs. And I think that was $27.5 million.
So delete 30 million and put in 27.5?
Correct. And I thought, just to make it clear, I don't know that it was stated at the meeting, but that's previously approved.
That's fine, that makes sense. Do you have any other edits to the minutes of December 11? Don?
No.
Okay. Are there any other minutes? All right, then I would move that we would approve the minutes of December 11, 2025 as amended. Do I have a second?
Second.
Second.
Okay, Gerard got the second on that one.
Okay, any discussion, any further questions about the December 11th minutes?
Okay, let's do the roll call. This is a vote on whether or not to approve the minutes of December 11, 2025 as amended. Brian Conway,
Yes.
Kathy Kukalo,
Yes.
Eric Dahlberg,
Yes.
John Garofalo,
Yes.
Pat Geyer,
Yes.
Gerard Jansen,
Yes.
Don Kupka,
Yes.
Lindsay Liss,
Yes.
Carlin Reed, yes. Paul Rodriguez.
Yes.
Sri Tupel,
Yes.
and Lois Wassoff.
Yes.
That passed unanimously as well. Thank you very much, folks.
All right, we will move on to the next item on our agenda, which is the liaison reports. We have in the packet the two pieces of written material. One is the written versions of the liaison reports that I received by Monday of this week, so I could include them in the packet. We also have Carlin's excellent notes on the chair's breakfast, which is always a really good summary of what's going on generally, which I had to miss this week, but Carlin represented us at the meeting. The last item under that topic I'll get to when we do the actual verbal reports. I'm going to do a little update on the Financial Policy Working Group. But for now, are there any additional verbal reports to supplement what we have in the packet? I'll start by saying I know that Kathy wanted to share some updates on the Land Use Working Group. So why don't we start with Kathy and then see who else might have updates? I know Carlin does as well.
Yeah.
Okay, thank you, Lois. So many of you know that the Land Use Working Group has spent the last 6 months being divided into 3 subcategories, and they're at the point where they will be summarizing their work and presenting preliminary discussions to the select board. So what I wanted to kind of highlight for folks is that there seems to be certain paths that look like they're leaning in a particular direction. So Public Works, as many of you know, Public Works has been looking at the wastewater facility at MCI. And after many different iterations, it looks like the Land Use Working Group is leaning towards requesting an additional 3 to 4 acres at MCI for the new Public Works facility that would free up Kai's Road for sale, which is a desirable piece of property. And again, these are leanings, these are not decisions at this time, but I thought it would be interesting for folks to hear where it looks like things are going. With public safety, the current combined fire and police facility renovations are very expensive, do not have the same useful life as new construction. And as previously reported, the needs of West Concord seem to be growing and making a heavy weight towards looking to split fire from police and site the fire department in the West Concord area. And lastly, the municipal consolidation, again, previously reported, is 135 employees across 18 locations. It appears that the path that may be the most profitable for the town would be to consolidate and looking for a vacant office building that the town could acquire that would be able to be used, and that would free up Peabody, Ripley, and others to be sold to raise funds for capital improvements. So as this moves in this direction, there is a warrant article that will go into this year's town meeting. I don't believe that the number has been fully baked as yet, but the monies that will be requested, and I'm not sure what source they're going to be requesting the funds from, but it will be to flesh out and have studies done in order to be able to verify the costs and opportunities for these actions. And my last comment is that I spoke with Sten recently, and together with Lois, we've decided that it probably would be very beneficial for the full committee to have Sten and Judith, the co-chairs, come to our February meeting to present how they came about their various decision-making process. Any questions?
That's really helpful. Thanks, Kathy. And I do think it's a great idea to have the two co-chairs of that group come to our February 26th meeting. It's a critically important project for the town, and it's going to, over time, involve the expenditure of a lot of money. So there's going to be a lot of stuff that we are going to be asked to think about and opine on at appropriate moments, and the more educated that this group can get, the better a job we'll do. So I'm definitely planning on putting that on the February 26th agenda. I will miss that meeting. It's the only meeting the whole year I'll miss. So Lindsay will be chairing that meeting. But I'll work on the agenda and the packet, and I will make sure that I watch it asynchronously, because I really want to see that presentation. So before Carlin speaks to the Financial Audit Committee, I just want to highlight two things. One is it's in the written reports that Eric and Pat did, but the good news, and most of you have probably heard it already, is that the schools will be coming in at guideline on their budgets. So, and as we'll hear a little more about tonight, the town's going to come in at guidelines. So that's all, very good news. And why don't you go ahead now, Carlin, and then I'll speak to the Financial Policy Working Group.
Okay, this is an update on the Financial Audit Advisory Committee. They've scheduled 2 meetings, February 11 and February 26, both at 1 o'clock, to look at the various audits. The February 11 meeting is going to look at the fiscal year 24 town audit. There'll be a presentation and review and discussion. And then they'll be talking about the schedule for doing the regional school district audit, the light plant audit, and the fiscal year 25 town audit. That's the February 11 meeting here in the Select Board Room at 1 o'clock. The February 26 meeting, 1 o'clock here in the Select Board Room, is going to be looking at the fiscal year 24 regional high school audit, presentation with review, as well as the calendar year light plant audit, presentation and review. And then there'll be a discussion of the fiscal year 24 town audit letter to the select board, because that's part of the process of what the FAAC does, is they have presentations, they talk about it, and then in the meantime, they draft up a letter to the select board saying, here's what we recommend as far as what to do with the final audit results. So that's the update on the FAAC. Any questions? Oh, one other comment, and this is stemming from a comment that Eric had raised to me earlier. I looked into when the last time the FAAC met, and that was September 18 of 2024. So it's well due to have an updated audit and to get the fiscal year 24 and fiscal year 25 audits back in time. And I'm very grateful for that, having those scheduled. Thank you.
And we're going to talk about this as a separate agenda item?
It is a separate agenda item.
Okay,
so-
I'll refrain from commenting.
Yeah,
Okay.
in the packet are materials that were presented to the select board meeting, which had been scheduled for Monday, and then there was a snowstorm, I understand, so it got moved to Tuesday. And there was a discussion at the select board on this topic, and that also dealing with the management letter that we had looked at a draft of at our last meeting. So I had asked Jennifer and Ryan to include those materials in our packet, so there'll be time to ask questions then, and under that same, I characterize that in the agenda as an update, because that also will be not a full FY27 budget presentation, but the slides are all there for you to look at. The presentation to the select board was in some detail, and I thought it'd be useful for our committee, now that we know that the town will be coming in at guideline, to understand the process a little bit and to get a sense of how what decisions were made to bring the budget in at guideline. So we'll get to that shortly. Actually, very shortly, because it's the next item on the agenda. What I wanted to highlight, and it's in the packet also, is I think we can take a win. And I think the win we can take is Finance Committee, Finance Department, and Select Board. Because the product of the Financial Policy Working Group is a policy on reserves that was adopted in December by the Select Board, and the final policy as it was approved, with very minor changes from the draft that the Financial Policy Work Group presented for consideration, is in your package. And, for those of you who remember the last year and the moment at town meeting, when we were on the other side of this question from the Select Board, I think this was a really good process. This was, it took a lot of work and a lot of contributions from different people and a lot of research, and we came up with something that is going to, I think, really help the town anticipate and plan for future expenditures and hopefully manage those in anticipation a bit, and which hopefully will have the effect of minimizing some of the tax impacts on all of us. So it wasn't nearly as nerdy as it sounded. It really was a very productive process, and Don and Jennifer and Ryan and Wendy all made real contributions to that. I mean, I'm really happy with the outcome. So that's in your packet, and when we do what will not be a deep dive, because we're not there yet, but a quick overview of the warrant articles, you'll see that that policy is already being applied. There are warrant articles that will be proposed for this year's town meeting to create and fund stabilization funds. So we'll get to that. Any other thoughts about liaison under this agenda item, liaison reports? Anything to add?
I'd like to add, just on the policy thing, agree with everything you just said, Lois, is that every member should read this just to be familiar with the terms and what is in place, what is, so that it's a piece of sort of literacy, I guess you could say,
Yeah.
that is new to Concord, and that would be nice to,
Yeah,
to-
Yeah, I
for
agree.
this group to be familiar with.
yeah, I agree. And you've seen, the committee has seen drafts of this as it's been evolving. So I think it will be interesting to see where it landed. And we really made an effort to make it, with input from the committee. Changes were made in this after each finance committee meeting where this was discussed that really, I think, improved the policy. So this was really a group effort on all of our parts. But it'll be good to be familiar with it because we're going to be looking at warrant articles this year and in years to come that are going to be considered in light of this policy. So we should all understand it. Okay, so now I'd like to go on to item 6 on our agenda, which is, which I'll essentially turn over to Jennifer and Ryan. First is the Financial Audit Advisory Committee. So Eric, this will be your moment to for any comments that you have or questions. And then we'll move on to an update on the town budget. We don't have detail on the school budget, but we know that they're coming in at deadline. So I will sit back.
Hello, everybody. The audit review presentation was made to the Select Board on Tuesday. We had about an hour on that agenda for these two presentations, and we took well over that between the presentations and the questions that were resulting. So I am going to try to shrink down both of those presentations to meet the needs here. As Carlin said, the Financial Audit Advisory Committee will be taking up all of these things in just a few weeks, but we wanted to basically make a statement and kind of walk through what we see in the management letter that has raised concerns. We wanted to try and address that issue. I'm going to read a statement from Kerry. So this is written in her first person. I'm saying her words. I want to begin by acknowledging plainly that the FY24 audit identified material weaknesses in internal controls. That is serious, and it is not consistent with the standard Concord expects of itself or that this board and the community rightly demand. As town manager, I am accountable for the overall administration of the organization, and that responsibility includes addressing these shortcomings directly and transparently. Concord deserves strong financial stewardship, reliable systems, and timely audits. And where we have fallen short of that standard, it is my responsibility to correct course and ensure we do better. I also want to be clear that these issues are understood, documented, and actively being addressed. The audit findings reflect a specific period marked by staffing instability, a major financial system conversion, and misalignment in the leadership of the finance function, all of which required decisive action. Some corrective measures identified by the auditors have already been completed. Others are underway with defined timelines, and additional controls are being strengthened as part of the town's remediation plan. We are also moving forward with the independent review process through the Financial Audit Advisory Committee, which will meet with the auditors in February and provide its assessment to the board. I asked for time tonight because I believe it is important to address these findings head-on in public. We will walk you through the issues that arose, what's already been corrected, and the concrete steps underway to ensure that this does not happen again, so that Concord returns to the level of financial oversight and discipline our community expects and deserves. So we can work our way through here. I'm going to read just a few notes. As I said, this presentation took about a half an hour the other night. So what we are discussing is essentially the management letter, which identified material weaknesses in internal controls. We're talking about transparency, accountability, and direction. The findings are serious and not consistent with Concord standards, but this discussion does not replace the independent reviews by the Financial Audit Committee. First, the FY24 audit found no fraud, misconduct, or noncompliance. The findings relate to process and oversight, not the town's financial condition. A municipal audit does not provide an opinion on the effectiveness of internal controls. However, it did identify that there were material weaknesses in internal controls. What material weakness means? A material weakness means that there's a reasonable possibility of a material misstatement. It's more serious than a deficiency and signals risk and reliability concerns, not intent. Strong internal controls inhibit the possibility of risk and misstatement. We'll walk through these 4 identified material weaknesses. Reconciliation timing is just that. It's the timeliness of reconciling. Moving forward, we've established a schedule for completion of all reconciliations within 45 days of month end. This timing is deliberate due to all of the actions that need to take place at the end of a month, delay in receiving external information such as bank statements. Those tend to arrive probably 10 to 15 days after the end of the month. That allows the staff enough time to assimilate any changes that need to be made and updated, and then confer with the other departments as well to make sure that everything is reconciled between the treasurer, collector's office, and the accounting office, cash ledgers, general ledgers, receivable ledgers. There's a lot of pieces that need to go into that every month. So we allowed ourselves 45 days to get all of those pieces completed in a collaborative way. Capital and cutoff controls. There have been instances recognized where invoices may have been paid in the wrong fiscal year. Services received in May or June were paid in July. Services for the ensuing fiscal year, such as dues payments or such, may have been paid early when the invoice was received. We are establishing a written procedure and development training for deployment in May, which will alleviate that lack of oversight and processing and knowledge across all employees who are processing invoices. We'll set up, we'll make that procedure in writing so that everybody can reference it at any different time. Additionally, we will be adding extra scrutiny to those end of year and beginning of year invoice processes. Different departments submit their invoices. Those invoices are signed off by department heads, so there's at least 2 levels at the departmental side. We are adding, and then they are reviewed on the accounting side. We're adding at least 1, if not 2 more levels of review during those 2 months for every invoice processed. The capital controls is a timing issue. Again, it comes down to departments posting invoices, even though they are not constrained by fiscal year, but for capitalization purposes for our depreciation schedule, we need to be clear on when those are posted. Budget posting and monitoring. FY24 was a unique year in budget posting. The budget that was presented and accepted at town meeting was different than what was uploaded into the system. There was a variance that went through town meeting unanticipated. So reconciling the budgets was challenging for the auditors when there were multiple different budgets in queue. We've eliminated that by strict budget version control, and we have reestablished oversight on the budget verification on the finance administration side, preliminary checks before importing into our software system. So we will make sure that all versions are identical and carried forward into the new year. And journal entry processing. In the staff turnover in accounting, there was a separation of duties lost in preparing and posting journal entries. We've reestablished that segregation of duties so that if the assistant accountant drafts a journal entry, then the accountant posts it. If the accountant drafts a journal entry, then the assistant accountant will review it before posting. simple, easy solutions. It's just a matter of reestablishing those internal controls that were noted. So the timeline that we're talking about here is fiscal year '24. That was more than 18 months ago where these deficiencies occurred. In FY '25, we were still working with some of these deficiencies because they were unidentified at that time. Some of them were identified as notes in prior management letters, but they were not given the emphasis that was necessary to steer the course differently. So they didn't necessarily get worse, they just were not fixed in a correct way. So '25 was a period of delayed visibility. We were not aware of some of the potential weaknesses. So when we learned of them in FY '26 in December, we have verified findings, we've had a leadership change, and now we can make some correction. 24 is an outlier for a few reasons that I've just already stated: the staffing instability, the misalignment with leadership, and a fiscal year close in the newest Munis system. Those are all now resolved, and we are working through FY '25 with the new audit firm we've made them aware. They know that these were material weaknesses. They are looking for those solutions to be sure that they've been put in place. So FY '26 is now a year of correction and stabilization. Now that we know what those are, we've established accountability, and we are providing information. We have definitely turned the corner into correction and stabilization. I think that pretty much covers everything. We kind of reiterated a few things. We are moving forward. Now that we know these material weaknesses existed, we are moving forward in correction.
All right, I'm going to open it up to questions. Who would like to begin? Eric, would you like to begin?
I have one question, but, sure, okay. Jennifer, on your slide deck, there's a note about an oversight and next steps, and one of the bullet points in that slide deck says, return to normal cadence expected by fiscal year '26. Can you be any more specific about when in fiscal year '26 you think we can get back on track? Because we have a couple years
Yes.
audits to deal with, and it's not just the town's audits, it's also the light plant and the regional school district. So
Yes.
when do we get back to normal?
We're in the process of getting back to normal. I believe we will be caught up by the end of fiscal year '26. We're currently in the middle of performing our FY '25 audit. That will be complete within, I believe, just a few months. The calendar year '24 audit for the light plant is still in review, but they have already started their calendar year '25 audit. The region audit is, for '24, is complete, and they are working through to begin and stay on track with their '25 audit as well. So I believe by the end of FY '26, we should be caught up. In FY '27, we will be on target for timing. CMLP is already on target for timing. They're working on their '25 calendar year in January. We will have the audit team in place, I'm expecting in the fall, which is usual cadence, September, October. Once we've closed the books, we send them the materials, and they schedule usually around November or early December for on-site work. That would be the normal cadence.
And just to be clear, because I think everyone here knows, but they may not, we're using a different audit firm.
Yes,
It
for
going
FY
forward.
'25, the town has changed audit firms. We're currently using Roselli Clark and Associates, and they are the team that's in House this week, working on the FY25 audit. CMLP has also changed audit firms. They are using, I have it written down, Goulet, Salvidio, and Associates for the light plant. They're a different audit firm out of Worcester. They do many other light plants in the Commonwealth. And so that's their strength. So we decided that that was a strategic move to separate the two audits in that way. The region will be using CBIZ for one more year per their contract with them for FY25, and then they anticipate checking and potentially moving to Roselli Clark in FY26. That's undecided at this point.
Other questions? I'm going to go around the room. Who wants to start? John?
I'll go, but I think Eric had his hand up first. So
Okay.
I'll go after Eric.
Ready? Go ahead, Eric.
Yeah, I mean, we had reactions to this at our previous meeting. I won't repeat myself. It's, really, really poor performance on the part of the town and really a failure of oversight by the committee that's charged with overseeing this, the FAAC. I didn't realize this at our previous meeting, but when I consulted the town website, they, as this whole thing unfolded or really unraveled, I think is the right word, they didn't meet. They didn't meet once in calendar year 2025. So I looked back. They met, per their charge, they're supposed to meet at least 3 times a year. Going in reverse order, they met 4 times in 21. That's good. They met twice in 22. They met twice in 23, and not all minutes of those meetings are available. They met 4 times in 24. Not all minutes are available. And they didn't meet once in 2025. So I think it's really critical. I appreciate the presentation. I appreciate the fact that the town administration is owning this and is looking forward. But oversight is critical. It's not in the FinCom's scope. But I think at a minimum, the entity charged with overseeing this stuff needs to meet. They need to meet their charge. We, as a town, may want to consider an additional layer or layers of oversight until we're confident this is back on track. I don't necessarily know what that looks like. That's not up to the FinCom. It's up to the Select Board. But I think that's worth considering.
Is Wendy online?
She is.
Wendy, feel free to jump in whenever you think it's appropriate. I don't want to put you in an awkward position, but I just want you to know that we are ready to hear from you whenever you want to speak.
Thanks, Ryan, for unmuting me. I think, Eric, your point is well taken. The Financial Audit Committee schedules their meeting according to the availability of the audits. And so we've had some significant delays in those audits, but I certainly understand the concern. And part of the audit firm, our audit follow-up will be addressing some of those issues as well. So point well taken. Thanks. Did you hear that?
Yes.
Yes.
Thank you, Wendy.
Okay. Sorry, I can't see my mute button. There you go.
John, did you want to speak?
Yeah, so if I look at the contract signed with a municipal auditor, does it specifically task them with searching for fraud?
No.
So then is it misleading to say that the auditor did not find fraud?
No. They're not tasked with finding fraud. If we assumed or were curious that if there was fraud, we could hire them under a separate contract to find that. But in the course of their regular audit, they would sometimes uncover that, but they're not tasked with finding that.
Right. But just so we're all aware that it's very rare that the auditor is going to find that fraud unless it's forensic and looking for it. So again, I field calls weekly about from people in this town who are very concerned, more than most. And to I think what Eric's alluding to, oversight and getting the trust back is critical. And I don't know if it's slightly misleading when we don't know. No one's accusing anyone of anything, but we had material issues with reconciliation for a year, which is usually very rare unless someone's doing something, and I'm not saying someone is, I'm just saying I think there's a lot of trust that has been lost, and we should be aware of that as a community and fight for that.
Other comments? Don, you had something?
Yeah, Jennifer, I think you began by saying there were 3 reasons why '24 was an outlier year. So what I was thinking then, for that to be the case, would then you'd be saying that we're reinstituting, or we're ensuring that the policies are being followed now. But you kept saying that we're establishing a written process, or we're changing a process. So my first big question is, what was '24 an outlier year because we disregarded our existing policies and processes? Or was '24, '23, '22, were they all outliers because there were no processes, or these specific processes were not in place?
I believe some of it comes down to staff turnover and understanding roles and responsibilities. Whether those processes were in place for prior employees, the new incumbents may not have known what those processes were. We're working on understanding roles and responsibilities. One of the things that the auditors do look for is process and procedure manuals. We're making sure that those are actually up to date and are being followed.
Okay. And to John's point, when I heard you say that we're establishing a written process that requires 2 sign-offs, and I saw that in the letter, that an invoice can be approved by the person who ordered the item and it was being paid, that there's really no way we'll know whether that was a legitimate invoice or not. Is that not the case?
The level for invoice processing, if there's a new vendor, for example, it needs to come through the accounting office for approval first before an invoice would be authorized for payment. So there's a second level in that process. So creating a vendor, a fraudulent vendor would hopefully get caught in that process. And in my prior community, that I did do that. I would create those new vendors in our system, and if anything looked even remotely weird on that paperwork, Secretary of State's websites are super helpful. So we are working through what levels of scrutiny are we doing in each piece that we process.
So I'm really glad that you're doing that now. And I guess I'm left with the question about the past, which will remain a question, I guess.
Right.
Thanks.
Yeah, I have a
Jared.
question. I've gone through 2 or 3 of these changes in financial systems. What is your process for putting a new vendor in the system?
We require a W-9, which is verifiable
Okay.
in the process.
But internally, is there more than one person to say, John Smith has got a W-9 and sends it in? Is there more than one person within the department that has to approve that before it goes into your system?
Well, the W-9 would come from a department, so somebody who is looking to make an order would request the permission from their department head.
Yeah.
If it's over a certain dollar threshold, it has to go through the procurement process. It has to go through the purchase order process, which includes multiple levels of approval.
Okay.
And a new vendor would be entered in the accounting office, which is outside of that circle as well.
Paul, any questions? Any questions online?
I don't see any hands.
Brian?
Yeah, Brian.
Yeah, no, I guess I was just following up on Don's question. Is there a vendor management process for the town? A W-9 is I would it's a pretty low bar, and generally when there's a vendor management process, there's more looking into like principles, looking into any potential bad acting, triple B, Better Business Bureau ratings, things like that. Is there, past fraud, UCC, liens, lawsuits, et cetera? I guess maybe talk about the vendor management process that is in place now.
That type of scrutiny is kind of out of the scope. it comes more to the purchase order scrutiny process. We don't process, is it $500?
Yes.
We don't process any invoices over $500 without a double level of authorization. So anyone who's going to try and put it through an invoice for any amount is going to get that double level. Anything over 10,000 is going to go through procurement as well. So there's multiple levels there. So the vendor scrutiny is more inherent in our process than necessarily looking up every single vendor. But for the most part, we work with the same vendors, and they're kind of known quantities. So any new vendors coming in are looked at through our regular processes.
That's helpful. What are the regular processes for a new vendor?
Well, I believe I basically went through that. A department who needs to use a vendor that's not in our system would reach out, get the information from the vendor. Their department head would have to approve the order, the purchase order. It would come, depending on the level of purchase, it would come through procurement in that process as well. And then once they had identified that they needed to make a purchase, before even the purchase order process, it would go through accounting for setting up the vendor in the system. And then it would go through those other levels for scrutiny through the purchase order process. Munis has an extensive processing tree, yeah, that requires multiple sign-offs. And procurement has an additional process outside of that for contracting.
Okay, no, that's very helpful. Thank you.
So I have a question. When you went from one system to the other, did you do a scrub down of all the vendors in the old system so that you only brought across sort of?
I believe we did. We culled out the ones that were not being used for a certain period of time.
So you did a scrub down of all the
Yes.
information before you transferred everything to
Yes.
the new system? Okay.
And that is common when transferring systems in
Oh, yeah.
municipalities, yeah.
So unless there are any other questions, I want to move on. And just to set some expectations here, again, there was a long presentation to the Select Board on the present state of the FY '27 town budget, and that'll be posted. What I had asked Jennifer and Ryan to do is to give us an update on that process. We will be engaged in this continually over the next couple of months, up to and including our hearings in March, when we'll be looking at the full budget proposal and making decisions about recommendations. But given the larger context here, I thought it would be useful for our committee to ask Jennifer and Ryan to update us on the current status of the FY '27 budget and to give us a sense of the process, how they got from what we had been discussing at prior meetings and what their prior presentations were to the budget that is coming in at guideline at 2.5. So with that, I will stop talking, and I will turn it over again to Jennifer and Ryan.
Thank you. So the slides that you're going to see are the same slides that we showed to the selectmen on Tuesday. However, my script is different. So we will walk through the revenue projections, the guidelines, the budget, joint accounts, and capital improvement. The state aid is coming in around 3.15%. That's current governor's budget. It has not gone through House or Senate. We're looking at a slight increase in local revenues as usual, and the tax levy is calculated at 0.3 below our maximum levy. That's just been the benchmark that has been used in these particular calculations to date. That is not the actual levy. Our target for 2.5% was $34,520,861. So you'll see that at the end of the presentation in the totals. At the selectmen's meeting, I walked through kind of what the changes from FY '26 to '27 were. But what I'm going to do here is I'm going to walk through the changes between those 5.3 requested, the 2.95 proposed, and the 2.5 proposed. So you can see where we made those adjustments in this process, not necessarily from FY '26. There were three things that we included in here. One, as we met with the department heads, we wanted to maintain level services while consolidating costs. That was essentially what I took as our charge from you. We also looked at each department and made sure it was right-sized for the department's needs. We incorporated the agreed-upon COLAs and steps from union agreements and for non-union. And so those changes, some of those changes in each line from the 5.3 to the 2.5 and in between, some of those are just COLA adjustments. So those are not additional expenses, those are just those COLA adjustments rolled through. In this general government grouping, the adjustments were finalized to move one FTE from the manager's office to a public safety business manager position in the public safety department. We confirmed software subscriptions were accurately budgeted in IT for shared or individual budgets for standalone use. So you'll see a change in the IT budget. It went down initially, and then it went back up. We made sure that we were including everything that was necessary there, but nothing that wasn't. We added funds for a special town meeting. There's one that's been discussed. We figured it was worth making sure we could handle that in the future. And the legal services, although they didn't change through the request process here, those are restored to the prior FY '23 and FY '24 level, just for note. In finance, all salaries reflect current employees. All vacancies are now filled. Software conversion was software conversion was completed, so outsourced services that were reduced for consulting and implementation, those have been pulled out entirely, or not entirely, as much as we possibly can as we are finishing this fiscal year in contracted services. We did not build in any additional contracted services. Public records surged 120% in 2 years. We built in an extra $40,000 for support for public records services. And we increased the assessor's budget by $10,000. They have multiple abatement cases open at ATB, and those processes take up to 24 months to resolve. And so we needed to make sure she had the resources necessary for legal counsel. 2 major elections in FY '27 drive this huge increase. You can see that we had budgeted more initially. We were able to refine those costs, but I'll note that without that additional $70,000, the total departmental increase is actually 0.28%. Community development includes a reduction in seasonal crew. The salaries were adjusted for the COLAs, however, the historical hours and need for that were lower, so we were able to basically match the effort that has actually been expended, not anticipated. The health division offset costs increased with software realignment, but then were mitigated with lower step reductions. The economic vitality increases actually were misstated at the select board's meeting. The adjustment in the economic vitality is actually only a shift. We thought that the adjustment was I said that it was additional funding for economic vitality. It's actually a shift of economic vitality and tourism funds from tourism to economic vitality, but because they're in the same budget grouping, that's not the driver here. It's just salary adjustments for seasonal and for full-time employees. The library increases are COLA and steps for our union and non-union. And those increases always drive an increase in materials for state mandates. Senior services, the initial salary budget included an employee that has historically been funded with grant funds, so we made sure we removed that as well. It's a current employee that was always on our payroll, but has been and will be funded through grant funds. The ceremonies and celebrations budget was right-sized based on actual program costs. They used a model of priority-based budgeting to gather all of the events and costs associated into one place in the initial request. Then we discovered that there were a few things, because of the scope of that consolidation, that were already being covered in other budgets, so we made sure that we were not double counting those. In public safety, we've stood up the dispatch budget as a standalone department. Initial estimates were revised to include overtime, which was not broken out initially from the police budget when the rest of the budget was pulled to standalone. So since FY '27 is the first full year, we will expect some refinement there in '28, understanding both police department and dispatch individually. The police budget shows that it's down by 10%, but that is offset by 3 factors. The dispatch CBA did not include the retroactive pay for 18 months initially. So now, again, that's also right-sized in dispatch. And the non-salary operating costs for dispatch were not necessarily pulled out one for one, only because we need to make sure we understand what the needs of that particular department are. And we added a 0.5 FTE to each, the police department and the fire department, for the business manager. So the net impact of the combined public safety shows 9.18, just due to those factors. So if the minus 10%, the plus 100% actually nets to a 9.18% increase. The significant decrease in the fire department is due to reduction from the ALS, Advanced Life Support Services. We identified what those true costs are that were easily transferable to the ambulance fund. So we were able to reduce a certain amount of easily identified items. In Public Works, the salary adjustment under administration was a misallocation of a water sewer supplemental staff. They initially thought, because they all work together, they put them in the admin, but we realigned that to water sewer. Parks and Playgrounds has been reduced only because we've added that to Parks and Trees. Parks, Trees, and Playgrounds will be the new department moving forward. It's the same staffing and similar mission. The major increases in Parks and Trees and Cemetery are tied to a CBA settlement, which was covered in salary reserve in earlier versions. Unclassified sees a minor increase in the reserve fund, and this is due to alignment with the new reserve policy. And the salary reserve has been reduced due to settled contracts in the last 7 months. There is still one CBA in negotiations, and this includes sufficient funds for merit pay and compensated absences for any employees that choose to leave the employment of the town. I don't know why we budget that. We shouldn't have to. This is the way it breaks down by department for the overall budget. And you'll see under the FY27 proposed column that 2.5% is the target amount. We're still waiting on actuals for our joint accounts health insurance was initially projected at 14 to 15%. That's still here in this joint accounts budget. We will find out in about a week and a half or so, 2 weeks, what our percentage actually is. The group insurance average increase is actually 8.3%, so we are anticipating that coming down significantly. We don't know if we're going to be around 10%, but it will definitely be less than 14. Similarly, for property and liability insurance, the group is seeing a reduction there as well. So again, that one will be coming down. We just don't know exactly how far. Debt service, we have 14 projects retiring off of our debt schedule within the levy. So again, we're reducing that, that levy capacity, or we're increasing the levy capacity there. The debt service for excluded includes an estimate for the roads project and the new, the last piece of the middle school borrowing. Again, those are estimates for both inside the levy limit and outside, excluded from the levy limit debt. We should have a better estimate, although I think mine's pretty good, sometime in the next 2 weeks as well from the financial advisors that will help us with our borrowing. If we take the proposed amounts for all three schools, we end up with a total budget of about $143.5 million. And the visual there shows it's pretty well spread around. Capital improvements. This list, you can look through this list. It hasn't changed a whole lot since you guys have seen it in the past. And again, it's still not completely finalized. We have a couple other items that we're not necessarily in tier one, but we're going to put them into the authorization and use potentially some other funds. We're looking at how to structure that because they were in other columns, but they don't fall under other article authorizations necessarily. I approached the Board of Assessors the other day and explained to them the new reserve policy.
Good.
And explained to them their role in overlay and overlay release. So they were very interested in that development. They were not so interested in releasing overlay. However, I think with enough background information, we can certainly make a case to use some overlay surplus if they deem us worthy to fund at least a few of these items so it doesn't end up in the tax rate. They were really enthusiastic about not adding to the tax rate if they could alleviate it. So we're gonna use that to our advantage.
And they're planning on bringing that back at their next meeting.
Yes, their next
so
meeting, they're going to discuss
We're going to
that.
offer a little more information to them and see what they come back with on that.
It's a learning process.
It is, yeah.
But
Yeah.
it's a good start.
Yep. Tier 2, there are just 4 items there. The Sleepy Hollow Cemetery expansion, building repairs, those are mostly HVAC and other types of mechanical types of repairs on town facilities. And then the 2 swap loaders that are at end of life. So here we see the initial revenue numbers that we started the presentation with and the total expense budget numbers that we just walked through. And you'll see that it is just under $1 million underneath our expected revenues for expenses. So that is a favorable outlook for our levy capacity.
Thank you. This is very helpful and very informative. It's really interesting to see how you went through the process and what you arrived at. And again, this was an update. I want to open it to questions, but this is not your last chance to ask questions. And, you know, as I think Jennifer made clear, there are some things where we're still working with estimates on insurance percentages and things like that. So all that'll be refined in future meetings. with that said, does anybody have any questions?
I have one, couple.
Carlin?
Can I ask more than one?
You can ask, yes, you can ask more than one.
Okay, I have a couple of small ones, but one big one. Here are the,
Wait, we didn't say how many more than one.
you should know me by, no, you should know me by now. All right, small ones. Just so I get the acronyms in your presentation, ATB, Appellate Tax Board?
Yes.
Okay. And you define ALS was the Advanced Life Support, meaning the ambulance.
Yes.
CBA means?
Collective bargaining agreement.
Collective bargaining agreement, okay. Second question, you show budget information. What about actuals? When will we see the actuals?
When I put together the next, the final budget presentation, I will give you FY25 actuals, FY26 budget, and FY27 proposed.
Okay. Last one, and this is the big one. If you go to this slide, that's called the overall outlook, and I appreciate it if you would put that up on the screen.
Hold on.
I did a little bit of calculation, and I have a concern about that. So when you're ready, let me know. Okay.
It's the last slide, I think.
Yeah, the overall outlook, it compares FY '25, '26, and '27 projected. If you subtract, for each year, if you subtract the budget from the funds available, you'll see a trend.
Mm-hmm.
And I'm concerned about the trend. In fiscal year '25, the ratio between total expense budget to total funds available is 98.5%. So you're basically spending 98.5% of the funds available.
Right.
In fiscal year '26, that ratio increases to 99.0%. And in fiscal year '27 projected, that increases again to 99.4%. Now, how close are you going to get? I mean, I'm not, one more thing. I'm not a financial expert, but I would think you'd want to have a 1% buffer between your budget and your available, unless you've got some other wizardry to say, no, this is the right number. How close are you going to get to that 100 mark, which kind of concerns me?
Okay. This question actually came up earlier today. How do we read this? What is this actually showing us? I'll walk through kind of left to right and top to bottom. In the revenue schedule there, for FY25 and FY26, those are actuals. Actual budgets and actual approved monies through our DOR reporting. In FY27, they are projected. So we are estimating increased revenues, we're estimating increased state aid, and we're estimating an increased tax levy of just the 0.3. So the budgets to actuals are slightly in there. Ryan pointed out earlier, we have not factored into the expense the reduction of indirect costs. It is not included in revenues. So that difference in the revenue number to the expense number, that is actually your indirect costs that are applied. I have not factored in additional indirect costs into this comparison model, which will only increase that difference. The other piece to this is, once we set our budget, then we estimate our revenues, and state aid comes in, gets certified as actual estimated local revenues, then we calculate our tax levy. So the tax levy piece is actually, I don't want to use the term the plug, it's calculated based on all of those other pieces. So we put an estimate of 125 million in there. It could be 124, it could be 126. It all depends on what's approved at town meeting and where those other revenues actually land.
Okay, quick follow-up. I know our reserve policy doesn't address this particular ratio. Do you have some type of guidance that you're kind of following, or is it just sort of what seems close? I know you don't want to spend all that you have, but how close are you willing to get?
I feel like I can't answer that one.
I know.
Technically, it's not up to me. You guys set the guidelines.
I know, but
And
our guidelines
so-
don't look at projected revenues.
Right. Right.
So much. We say, okay, what can the town afford to pay, but we don't look
Yeah.
at.
And we do our best to project or increase revenues wherever we can to offset, which then lowers the tax levy. So if we can come up with other revenue sources, that's going to benefit the taxpayer and reduce that levy and increase that capacity.
Thank you. That's all I have.
Don, okay, go right ahead. I gave Carlin 3, I got to be fair. But we're blowing through my target here, so go ahead.
I think this is our only opportunity to ask questions, and it's a public forum, so we should use it.
No, this is not your only opportunity to ask questions about the budget, but it is the only opportunity you're going to have to ask questions about this presentation. We'll be looking at this budget.
I have questions
multiple
about this
times.
presentation.
Then go right ahead.
Thank you. So last year, the town meeting approved release of a reserve to reduce the impact of middle school debt. So on the summary slide, is that in these numbers? No. Good answer.
It is factored into the FY '26 tax levy, but it is not factored into the FY '27 as an alternative funding source.
Thank you. Good. So last year, in prior years, releases of reserves showed up under local revenues. And that's my question is, I would much rather see it come off the bottom at the end.
Yeah,
and
no,
reduce
it's
taxes.
a fact, the way that the stabilization funds were approved at the last town meeting, it was a reduction in tax levy.
Okay. The second one, I think, is something that Carlin was answering, you referring to indirect costs. My question was going to be, where are the allocations to the enterprise funds? And are you saying they're not yet?
The indirect
taken into
costs,
account?
again, in FY '26 are a part of the calculation of the levy. They're not factored into the .97 factor of the proposed levy. So, yes, we have other flexible revenue sources that will help alleviate the levy. Again, it's an estimate based on the prior year, so it's a fairly accurate estimate, but those factors are not identified specifically until after town meeting.
Okay, so that's been a pretty fast-growing source of funds in the past, and I think that's a focus of the town. So that will help to mitigate the impact on the taxes. Within the budget lines that are included in the 2.5% overall, are there any expenses that are not shown here? In other words, that are considered by the town to be not subject to guidelines, even though they are in those categories? I ask that because that had been the practice previously.
And what was the practice, Don? Again,
It was,
maybe-
well-
maybe
I guess,
you could be
yeah, I'm
more
not
explicit
sure.
about what
One
you're
specific practice was if there was a new employee added to the payroll, 75% was coming from a reserve release because it was public safety, and we had a public safety reserve. That was
okay.
a specific thing. Okay, so there's not
No.
anything, and I just wanted to ask that. And does line 14, A1, which is the town's debt service, does that include any plug for debt service for the debt to be authorized this year at town meeting?
It does not.
Does it include the debt that was authorized last year?
Anything that is currently planning to be borrowed this fiscal year in May,
Yeah.
it does include an estimate for that cost, yes.
Okay, so that would probably be
So
most
that
of
would
what
come,
was-
the first two payments would come due in FY '27. Anything that's authorized at this town meeting would likely not have any payment due in FY '27.
Thank you, good. I
All
got
your
it.
questions?
Good.
No more questions?
Not on this.
Cut you off, I want to make sure.
Good means good, Lois.
Okay, good. Anybody else? Anybody online have any questions?
I have a question.
Sure, Paul.
In previous meetings, I discussed the stormwater fund. And I was just curious, when we establish these funds, they act as, another bill for the residents, and that you've gone into that office budget to make sure that it's not layered in two different ways. Can you speak a little bit about that?
Yes, so the first 2 weeks of the month, we met with every department head and full department again, and we had some really good conversations. One of the things that we did was we made sure that things weren't double counted. We found out even after one of those conversations about the stormwater hadn't been counted at all. So again, that was an increase in the facilities budget that was not in a previous version. We had to add another $45,000 for that into facilities and other items. Those, so we did make sure that we weren't counting anything in more than one place. We weren't counting anything in water sewer, that we were also counting here. We did make sure that we were including any costs that were general fund expenses.
Okay, great, thank you.
Okay, now anyone online?
Let's see, let's take a look. Doesn't seem to be any hands rose.
Okay, good. So
I do.
Eric has another one. Okay, go ahead.
First, a comment. I think it's great that we're a guideline. I think it's, I know we challenged you to get there, and looks like we're there, so great job on the part of the staff. Very well organized presentation. One question on Public Works, kind of building on Paul's question. I was tracking your question differently. I thought what you were asking, Paul, was, and I believe you asked this in the previous meeting, since we're carving out stormwater, wouldn't we expect to see a savings in Public Works? And I believe your answer at the previous meeting was that savings was captured in the current fiscal year in FY '26. But I see a slight dip from '25 to '26. It went down by about $22,000. But stormwater, the aggregate fees for stormwater, I know they're still coming online, it's going to be way more than $22,000. So how does that work?
Right.
Am I stealing your thunder, or is that?
That's the basis of the
Is
question.
that rephrasing one?
But, I mean, with the idea that I haven't paid a bill yet associated with stormwater, nor I don't think anyone else has, and there's still some thoughts on how to populate that to make sure.
Did you receive it?
Oh, yeah? Well, maybe it doesn't pull it right out. But just wanted to double check.
Worried me
like,
there.
That thought is, just make sure that thought is
Yeah.
actively, thought through. So I'm sorry, I didn't mean to steal your question, but it's exactly
No,
in
I think I'm
line.
stealing yours, yeah.
Thank you for rephrasing, because then I can address specifically in the highway administration budget, there were costs associated with catch basin cleaning, street sweeping, things like that. We've actually captured those and removed them to make sure that they're captured in the stormwater budget. In FY '26, because it was a new year, I think they made some adjustments, but not all of the adjustments. We didn't actually end up rolling out stormwater billing until January. So we were 6 months behind on that. So we actually found other ways to make that whole for the year. And what I'm seeing that they're using the stormwater funds more is a lot of capital initially. It's not necessarily a lot of the day-to-day, but there are some of those day-to-day costs included there.
Can I say one thing? Thank you for that. I am, and I know this is meant to be big picture, so I'm not going to go too deep on this. That's for the budget hearings in the spring. I am concerned about Public Works. They did, this week it's sort of said they did a great job on the snow. It was a huge storm. But I was a bit concerned to read, there was an article in The Bridge shortly before the storm in which it was revealed 2 of the 4 sidewalk plows aren't working. We lost one of our big plow contractors. They're no longer able to service the town. There was, I don't know if it was an unfortunate quote or what, but it was along the lines of they're not able to meet the expectations of the town when it comes to snow removal. In the budget hearings in the spring, I really want to understand if town leadership is confident that Public Works is resourced appropriately in light of what sound like these like day-to-day challenges, and in light of the fact that they're taking on this huge roads catch-up project that we, as a town, voted ourselves $27.5 million further into debt on, and on top of that, implementation of this stormwater management effort. So just I don't want to get into the weeds on that now, but kind of a sneak preview of a concern I have looking ahead to the hearings.
And Alan Cathcart will be looking forward to those questions, I'm sure.
I'll give him a heads up.
Okay, I think this is great. This grounds us. Thank everybody. I want to thank everybody for the questions. They were very helpful. This gives us a basis for going forward, and it's really well presented and clearly presented, so thank you. All right. The next item is going to be pretty brief because we are a little bit out of sync with the Select Board. The Select Board had an extremely heavy agenda this week and could not really do a deep dive into the warrant articles. So I had pressed Jennifer and Ryan to give us at least a list. But, I mean, these are just the headings. This
Lois,
does.
if I could too, what I tried to do with this was also put in green in terms of anything that might have an impact for the
Thank you.
Finance Committee. I think make it a little bit easier for everybody to
Yeah,
read
that was
through.
one of my questions.
Thank you,
There's a
that's
lot of
really
green,
helpful.
though.
So this was just a way of giving us a sense of what's coming down the pike, what will fall within our rubric. We will be hosting 3 hearings in March, and every single one of these articles that Ryan has highlighted, and perhaps a few more, will be on our list. But it's early for us to be thinking too much about this, because we're not looking under the hood yet. But I just wanted to give people a sense of where we are. Some of these articles are, every year is different and an adventure, but every year we look at certain articles. The operating budgets are always within our rubric. There's new stuff.
There is.
And some of that relates to, and I gave you a little spoiler alert earlier in the evening, reserve relates to the reserve fund policy and the stated goal we now have to start literally, filling up our piggy banks, creating some savings accounts, because there are significant expenses coming down the road, and we can manage those most effectively if we started to save for them now. So, so as Don said, make sure you read the reserve policy, because we'll be hearing about these. So I just basically wanted to bring this to everyone's attention. If there are things that jump out at you that you want to ask a question about, like Carlin does, then let's do it now. So let's start with Carlin.
Okay, thank you, Lois. By my count, there are 39 of the 52 warrant articles that will touch Finance Committee. I have number 3, number 6 through 25, 28 through 31, 39 through 51. So that's what I'm looking at. Now, that was my note. There are 3 that are most interesting right now to me, because I have no clue what they are. Numbers 14, 20, and 21. Jennifer and Ryan, if you can give me a 30-second preview of numbers 14, which is restore fund balances erroneously returned free cash. Number 20, retroactive salary dispatch union collective bargaining agreement. Number 21, transfer of COVID fund balance deficit 2020 expenses. I'd really appreciate just a heads up. That's it.
Sure. Starting with number 14, in FY24, one of the items that closed in the closing of the fiscal year, there were 2 items. One was the salary reserve that was set aside for merit pay increases and any collective bargaining increases for FY24 was closed in its entirety to free cash. So any eligible increases or merit pay from FY '24 were shifted into the FY *25 reserve when they were paid. And again, domino effects, '25 has now been paid into '26. So we need to kind of true up the FY '26 salary reserve in order to pay the merit pay earnings for FY '26 and any FY '26 salary CBA settlements, because it's been depleted with prior years' fiscal time, due to timing and that initial closing of that balance. The balance that was closed was, I think, about $755,000. The article is for a smaller portion of that. I don't recall the number off the top of my head, but somewhere around in the order of $200,000. Another balance that was closed to free cash that, due to a town meeting policy, or standing vote, was the surplus insurance funds from the budget. There's a vote that says any, or maybe it's a bylaw, any funds, unused funds in insurance accounts transfer and close to the insurance reserve account, and that did not happen at the end of FY '24. So those funds were put into free cash. Those two, plus among other things, were really catalysts in the large increase in free cash in that particular year.
That's the impact.
And just to remind you too, Carolyn, I think Carrie had provided this update and kind of giving you, the Finance Committee, a preview as well as the Select Board. I think that happened in like the October timeframe when, so this is just an execution of what that update was, knowing we were going to be coming forward to town meeting about this.
Okay.
Item 20 is the dispatch collective bargaining agreement. It was 18 months out from settlement, so the salaries retroactive due for July 1st, 2024 to June 30th, 2025 were part of that salary reserve that was closed, and it closed in '25, and as such, we need town meeting approval to pay those previous year salary encumbrances. We're working on calculating what that looks like this week and next week so that we'll know what that dollar total is. We are able to pay the retroactive 6 months back to July 1st of '25. Actually, it's almost 7 months now, but the prior year we can't pay because it was not encumbered forward over the course of 2 fiscal years. Transferring of COVID fund balance deficit in FY '20, there was a lot of spending for COVID remediation, for COVID emergency, and much of those funds were recovered from the CARES Act and from FEMA reimbursements. There is still an unrecovered balance, whether or not we missed the deadline or they were ineligible expenses. It's a combination of both, but that fund is now, the Department of Revenue allowed to hold that deficit in anticipation of receiving reimbursements. That deadline is now passed, and so we either need to raise it on the recap or provide for it in another way. And the choice is to provide for it in another way with a free cash transfer to zero out that deficit.
Okay. Thank you. So all three are reducing the free cash level that we
They are
thought we
use of
had.
free cash,
Thank you.
but I believe the increase to free cash in that year that a lot of this affected was significantly more than what we're now finding needs to be remediated.
Thank you.
Ryan, can you scroll down a little bit? Let's see. Yeah, I think you were being overly generous to us. I don't think, there's a whole bunch of stuff that.
Not
was scooped
39?
up.
Okay.
Yeah. Anyway, this was just to give us an idea of what's coming. And my hope, when I put this item on the agenda, was that we'd be able to get into a little more detail. But, we will get in sync with where the select board is on this. They have to decide, even the numbering of these is not fixed. Nothing
This is
It's not, yeah. this is just
it's a kind of a
list.
suggested order based on prior.
Yeah, this could move around.
I think the select board's going to be looking at it at their February 2nd meeting, And they'll be talking about
Yes, that's
Next Monday.
ordering. Next Monday.
So we'll have an item that touches on this again for our February meeting. So the final substantive item on our agenda prior to our 8 PM adjournment is an overview of the Finance Committee report. I'm going to turn that over to Carlin and ask her to to talk about the input she is seeking from the committee as she begins to formulate what's going to go into our report this year.
Thank you, Lois. I'll keep this short. I've included in the packet a list of 19 possible trends. We're not doing 19 because that's way too much. What I'm going to be doing after looking at this list is grouping them into 3 groups, because there are a couple of messages that I think we want to send to town meeting. One is, can we afford the town budget? And to do that, we'll be looking at the projected revenues, the budget, and our levy capacity. So we'll have discussions about those. The second piece is going to be, can we afford the warrant articles that want to use free cash? And that's where we're going to be looking at the various warrant articles and whatever impacts they will have, plus the free cash certification level, or as close as we have at the time that we're ready to go to publication. Backstep, we have to have a really good draft. Well, I'm going to try and present a really good draft done at our February meeting, and we need to vote on it at our March 19 meeting, because it's due to be presented like March 23rd. It has to be included in the book. So I think by our March meeting, we would be voting on, or at least have finalizing the report. That's the target that I'm working for. So what I'm going to be presenting to the entire committee is something at the February meeting that has roughly about 30 pages worth of material that will show the layout and suggestions. Okay, I outlined 2 sections. The third section is looking forward. What can we see? What can we expect going forward? Growth possibilities, our debt load, and all this in the context of our new financial reserve policies. How is this going to work out? So those are the 3 basic groups that I want to use it in, and I'm going to try and, right now the document, if you include the appendices, is about 36 pages. If you don't include the appendices, it's about 31. And I heard from our town moderator that what will go into the briefing book is everything except the appendices. So if we want to add more stuff, but if we put it in the appendices, we can't count that up being in the book that is mailed out to every household. Plus, last year, the only piece that was in color was our finance report. Everything else was black and white. So pie charts in color, great. I'm going to use those as much as possible because they work well. That's the overall approach I'm taking.
In terms of looking forward, and maybe this is implicit in what you were saying, I hope we're going to include a discussion. I don't know how specific we're going to be able to be because we can't get ahead of the work being done by the land use working group and the MCI group, but I hope we're going to talk about anticipated capital needs, because I think that's critical, and it ties into the new reserve policy, because that's the sort of poster child for what we will be saving for now. And we've talked about this a little bit at the Financial Policy Working Group meeting. We need to really think about doing some education for the citizens who will be considering all the warrant articles, but certainly the warrant articles that deal with reserves. So I just wanted to...
No, that's perfectly appropriate. We're basically making the case for those warrant articles in the finance report.
Yeah, I think we should be.
Okay.
And for that approach of anticipating instead of just reacting.
Right, right.
And just a question for you. We have historically had our recommendations chart. Is that still in your vision?
Oh, yes, that's it. And I'm hoping that the people who are assigned to be the liaisons will work with the warrant articles that are related to those charts,
Okay.
unless there's some other division of labor that you want.
No, that's worked well in the past.
Okay.
So you're welcome to choose a different approach, but that has, I think, been, you end up getting at least a first cut at the explanation for the recommendations written by someone who's been following those events over the course of the year. So I think it gets you to a good starting point. We included last year a calculation of the tax impact of each article. That was extremely well received. I think we all want to see that there again. In terms of generating the charts and the spreadsheets, that will be the data that goes into the charts. I would really encourage you to work very closely with the finance department. Things that describe historical data and trends are something that we should be able to have a high level of confidence in. We should be able to generate well in advance by identifying what we want to cover. And I think the finance department will be available to us in, and Ryan, let the record reflect, Ryan is nodding.
Thank you, Ryan. I appreciate it very much.
So I want to do that. Projections, there will be charts that include projections. We're obligated to do certain kinds of projections, like the taxes. And one thing that I want to be really clear about, because it got better last year, but there have at times been confusions about this, where we are making assumptions in any chart or narrative that includes projections, let's be very clear about what the assumptions are. Otherwise, we can be inadvertently misleading, and it would be inadvertent, but it's still creating confusion where we can avoid it. So those are my thoughts. Anybody want to volunteer to do any? Who would like to work with Carlin on this? No one.
Lois, I have a suggestion. How about if I reach out as needed? That would probably be
I think that's
better
much
than...
I was mostly being facetious, and
Okay,
I'm
good.
sorry I was looking at you, Paul. I
Yeah,
just
I mean,
had.
I'll help you, Carlin.
I apologize. It's just, that's where my head turns.
I kind of feel like there's a
Now,
screen behind
what
us.
we've done in the past
Yeah,
years,
there are a couple.
and I'm going to defer to Carlin on this, is we had a group of regular reviewers who were available to look at a section, comment on a section. Carlin can work at putting that group together. I volunteer to be on it. And let's, we'll put together a robust group of people who are devoting more time, and then when things go to the larger committee, they'll be at a slightly more cooked state.
Yeah, Lois, I've got to be careful about not creating a subcommittee.
I hear you.
Okay,
and,
so let me reach out as needed, and I suspect I'll be touching each one of you with questions on various things and put it together.
The group doing the reviews never met as a committee. We just gave feedback to the person primarily doing the drafting. So we were good, and we will be this year too. We will comply with open meeting law.
Good. Is there anything else? Dawn, it looked like you had something. Did you have anything else that you wanted to add since you were in charge of this last year? Okay. All right. All right. Thank you.
Okay. So if there is no further business, anybody mind making a motion to adjourn?
Accept motion.
Right there,
Second.
Paul. Right there, Don. Okay. I guess we should, do we need to do a roll call on a motion to adjourn? We do not.
You can declare that.
So, thank you all for your very valuable time. It is 8:10, and we are adjourned.
The jumper, Ryan.